I'm curious what your read is on Apple digging even deeper into the financial services world and what this means for other fintech players.
Well, I'm not at all surprised. I mean, for a few reasons. First, they process hundreds of billions of dollars worth of payments throughout the entire Apple ecosystem. And so the scale with which they operate is extraordinary for any type of payment system to run throughout their network. The second thing is they've been in payments for 8 years and they've already shown interest in launching both payment and credit products. And what they're doing in particular with Pay in 4, for example, is enabling consumers to just buy in another form. So it's a tender type, meaning it's a type of money that you can use. And what they do is make it easier to pay with your device and pay over a period of time that makes it easier for consumers to control their monthly spend. And so it obviously is helpful because, from Apple's point of view, it creates engagement. It creates this relationship even after a transaction because the servicing relationship for a Pay in 4 enables them to continue to build a relationship with a consumer on their phone. So there's tons of utility there, both for the consumer who wants to control monthly expenses, as well as for Apple, who wants to continue to dig a little bit deeper into the consumer's wallet.
Who does this hurt the most? What does it mean for a PayPal, for example?
I don't think it's going to hurt anybody. I think it is a new form factor and way to pay. And you'll see it proliferate across wallets everywhere. And so you'll see the credit card providers do it. You'll see specialists do it like Affirm, Afterpay, Klarna. And I think you'll see it as just another payment vehicle for consumers to use. And so maybe it changes whether someone uses debit, whether they use credit, or they use a digital form factor, but it's just another way to expand the relationship and continue to give options amongst all of their products.
We've seen a number of fintech stocks take a beating this quarter. I mean, we're looking at a lot of red on the screen there. Affirm, I know you're on the board of Affirm, PayPal, SoFi, Block, you used to work at Square for many years. Why do you think fintech in particular is taking this? I know there's a broader down market, but fintech seems to be taking it pretty hard.
You know, fintech had an unbelievable series of years between 2020, 21, where funding and valuations reached fairly heady heights. And so you see a reset back to valuations that are more standardized levels of valuations, particularly given the growth of these companies. I think you'll always see them operate with disruptive multiples, meaning they'll operate with multiples that are higher than the non-technically advanced companies in the payments and financial sector. But they came back to a more sustainable multiple level in this overall market reset. Having said that, the private market also reset. And in 2021 alone, you saw a 645% increase in crypto investments. You saw a similar increase in fintech investing. And all of that had reached a level of valuations and levels of interest that really had peaked, and it just kind of came back to earth. I still see huge opportunities in this sector. It's one of the biggest sectors in the United States and around the world. And it's a sector where the traditional companies that operate in this market are, for the majority of the public companies, over 50 years and older as companies. And so there's incredible opportunity to be disruptive in this space. So I still see lots of opportunity and lots of investment even today.
You're an investor in the crypto market, and I'm so curious how you're thinking about DeFi and adoption trends. The information just came out with a pretty explosive headline talking about Andreessen Horowitz versus Jack Dorsey and a crypto, quote-unquote, holy war that is brewing.
Okay, I think that's a little dramatic. Having said that, it is entertaining. I think DeFi is fascinating because it changes the paradigm of who controls and who owns companies and who operates them. And so I do think there is an opportunity to expand the aperture of how these companies are run and created. I also think we're only in the first inning of DeFi. we really are seeing tons of experimentation, whether it be in infrastructure or even in vertical products. But you haven't really seen use cases come to fruition and build significant scale companies where you're seeing
Okay.
these broader use cases used in consumers' day in, day out lives. But the
Right.
experimentation that's out there is pretty exciting. And I think it, along with the rest of the crypto market and the fintech market,
Yeah.
continues to show the level of interest in investing in this area of the United States economy.
Jackie, before you go, I want to ask you quickly about your new book, Self-Made Boss, which you co-wrote, and you talk to entrepreneurs, owners of small and medium businesses, really, some of your customers when you were working at Square Capital. What was the catalyst for this quickly?
Catalyst is small businesses need help to start, run, and grow their business. They are half of the economy, 2/3 of job growth in the United States. Lauren Weinberg, my co-author, and I really saw the need to create a pragmatic guide to help small businesses build their companies through feedback from other small businesses. And it's a helpful tool to help them, again, start, run, and grow their business.